Picture this. You're staring at your screen in 2027 and silver is flashing 147, 163, 189. And the same people who told you in 2023 that silver was just an industrial metal are now calling it the most important asset on earth. Not gold, not Bitcoin, not AI stocks, silver. And the question isn't what happened. The real question is, why didn't you see it coming? Let me take you inside what looks like a Bloomberg terminal, but reads like a crime scene. Silver didn't just go up, it exploded 100%, 150%. Briefly, over $100 an ounce in 2026. And here's the part nobody on mainstream financial TV wants to say out loud. This wasn't a rally, this was a repricing. Because for years, decades, silver was mispriced. And why? Because silver is the only asset in the world that is a monetary metal like gold, and an industrial necessity like copper, and a strategic resource like oil, but all in one. And markets they hate things that don't fit neatly into a box. So let's talk about supply, because this is where things get uncomfortable. Global silver supply barely moves. Mine supply growth is maybe 1 to 2% annually. 70 to 80% of silver is a byproduct of mining other metals. So the translation is, even if silver goes to $300, you can't just produce more. This is not oil. This is not Bitcoin mining rigs. Silver supply is structurally inelastic. And for 6 consecutive years, the market has been in deficit. Let me repeat that. The world has been consuming more silver than it produces every single year for over 6 years. Now, here's where things go from bullish to absurd. Silver demand isn't coming from jewelry, it's coming from the future. Whether it be solar panels, electric vehicles, AI infrastructure, semiconductors, take your pick. Silver is the best electrical conductor on Earth, which means every AI data center, every EV, every solar grid, they all require silver. And here's the kicker. Even when prices rise, demand does not collapse, because you can't just replace silver in high efficiency applications. You can try, but you can't thrift it. You can't eliminate it. But let's zoom out. Because this isn't really about silver. This is about the death of trust in fiat currency. Exploding sovereign debt, currency debasement, central banks trapped, and investors in 2026 noticing. They're out of bonds and fiat cash, and they're into hard assets. And silver? Well, that was the cheapest monetary metal on Earth. And that's why investment demand surged, even as industrial demand fluctuated. And when retail and institutional money hit a thin market like silver, you don't get a rally, you get a vertical move. So let's talk about 2027, because this is where the story splits. There are 2 paths. This is what Wall Street wants. Silver stabilizes and it stays in a $90 to $100 range. Industrial demand softens and rates stay higher, maybe even a pullback. Some banks are already warning of a crash scenario back towards $50 or $60 silver. But why? Because if silver keeps rising, it exposes something very dangerous: currency weakness. This is what the data suggests. Continued silver supply deficits, structural demand from electrification, and monetary instability. And suddenly, silver doesn't trade like a commodity anymore. It trades like insurance. That's how you get forecasts like $135 to $309 per ounce, or even triple-digit sustained pricing. Because at that point, price is no longer about cost, it's about availability. And here's the brutal truth. Most people watching this will still miss it. Why? Because they're waiting for a pullback, a confirmation, or a CNBC headline saying, it's safe now. But by the time that happens, that move is already over. Silver is a tiny market. It doesn't wait for consensus, and it punishes hesitation. Let me give you a real, unfiltered view. 2027 is not about whether silver rises. It's about how violently it moves. Base case, volatility between 80 and 120, periodic sharp corrections. Bull case, sustained move above 150, supply panic, industrial users hoarding. In an extreme case, an illiquidity event, physical shortages, paper versus physical price divergence, decoupling. And what happens then? Well, you'll hear a new phrase everywhere. There is no silver. This isn't about getting rich quick. This is about understanding the system. Silver is telling you something. It's telling you the monetary system is strained, the industrial system is dependent, and pricing mechanism is broken. And when all three collide, you don't get a smooth trend, you get a repricing event. So when you see silver at 150 or more, don't ask, why is it going up? Ask, why was it ever 75? As always, build that stack. iBankerU. Good day.